Michael Levick, welcome to Net Lease TV. Levick Roth law firm. Thank you for coming on Net Lease TV. Michael and I have known each other for a long time. We have some in common clients where we worked on some Davita, Fresenious transactions, Walgreens transactions in the past. And I know that I think we originally met at the Walgreens booth at ICSC. Is that where we met originally?
I think that's right. Certainly on the floor near there, if not actually at the booth. But
those
yeah,
those were really fun times. We remember the group of people at the Walgreens booth. It was amazing how many people would go just to...
Yeah, a national all-star list of net lease developers and people who lent off net lease development and acquirers. Just the whole net lease world was at that time really focused in that space because there was so much product coming out of Walgreens at that time.
So I love your backdrop there. Is that an actual prop or is that real?
we're in the woods today. This is
back there, Michael.
Working remotely. This is the backyard. So yeah, we're in the woods doing real estate deals.
Hi, this is Chris Marabella with Marabella Commercial Finance. I'm here above beautiful Beverly Hills. If you're currently leasing your mansion property and you're thrown into a 1031 exchange, you should be exploring triple net properties such as Walgreens, CVS, Jack in the Box, 7-Eleven, Dollar General, which are normally called net lease 1031 exchange properties. With a net lease property, the tenant takes care of the insurance, maintenance, taxes, and everything. So you can identify a property pretty much anywhere in the United States as long as it's a true triple net property. If you
So it's all
you don't
good.
have to worry about COVID, that's for sure. There's no elevators, there's no hustle and bustle, subways. You're just in a nice, quiet, serene area doing your transactions, huh?
That's
cool.
That's where you find me today, and you know what? It's not a bad place to work. So we're.
And where are you at again? Where are you at right now? What city? What state?
I'm actually in Bridgman, Michigan today, which is Bridgman is western, far southwest corner of Michigan, about an hour and 15 minutes from our office in downtown Chicago. But a common vacation spot for people in the Chicago area. Great beaches and laid back kind of farm resort community outside the city. So that's where we be.
Did you used to be with you were with Walgreens, right? When were you there at Walgreens?
I was with Walgreens back in the mid to late 90s, and at that time Walgreens was transitioning from being mostly an inline operator and shifting to a standalone concept. And of course, as part of that shift, that allowed for Walgreens to become a rather significant player in the net lease space that they weren't prior to that time. Because they were end caps in inline centers. And so with the growth of their standalone product came the opportunity to get involved with net lease. And at that time, they were doing as many as over 600 new store locations a year. So there's a lot of product being rolled out at that time in the net lease space through high growth, high credit tenants like Walgreens, and as you mentioned, that's sort of how you and I met back in the day, and how a lot of people, even in today's net lease world, who may or may not continue to be doing either Walgreens or even retail opportunities, but are staying in the net lease space, sort of cut their teeth because of just so many transactions originating back at that time. Our practice, like yours.
There? was Bob Roscoe and Abat and
Yes.
Noble.
Yes.
Was
Well,
Rich
a young Chris Noble who, yes. Bob was there. Bob actually had left the company and had come back to the company in the mid 90s, assuming a higher role in their real estate department, but worked with all those guys. Most of them have moved on to other opportunities outside the Walgreens corporate environment, but have stayed in the real estate space. So, yeah. And as you know, things change, but yet a lot of the players stay the same. So, well, Rob Silverman was there. You may be thinking of Rob. Rob was in-house for many years. I think well over 25 years. Rob actually worked next to me. My office was next to his office at Walgreens. I got to know Rob quite well. Rob, I believe, is currently outside counsel doing some Walgreens work. Rob's been practicing for a long time now, and I think he practices out of a small platform for Walgreens outside the company.
I financed the Walgreens, Michael, back fall of 2020 in Miami. I did that was the last one I did. It was a $10 million Walgreens, and the guy did a refi cash out nice store. And we did, I think the loan was like 3-1, something like that. But, you know, for a while there, when they were doing 365 stores a year, I think we were really hitting on all cylinders. I started financing the Walgreens right around early 2000s. I got into Net Lease finance, started Marabella in 95, and I think my first Walgreens that I financed was in the early 2000s. But
Got it.
How many stores were they doing a year? A lot, right? It was like a store a day.
Well, in the mid 90s, they were doing north of 600 a year.
Stores a day.
And obviously, it's a different world today. They're doing just mostly reloads, right? Relocating existing store base. So they're only doing a few hundred, maybe a couple hundred tops right now. So that
with COVID,
and what they're doing is a lot of, as you probably know, some lease extension arrangements on existing stores. That's taking up a huge percentage of their real estate team's time and resources, and then I think as an ancillary piece, just doing some strategic relocations as their leases burn off. They're also doing a new prototype, which is an incredibly small, radical change for them, where they're going down to 2,000, 2,500 square feet, coming out of a 14,000 square foot box.
Hi, this is Chris Marabella with Marabella Commercial Finance. I'm here above beautiful Beverly Hills. If you're currently leasing your mansion property and you're thrown into a 1031 exchange, you should be exploring triple net properties such as Walgreens, CVS, Jack in the Box, 7-Eleven, Dollar General, which are normally called net lease 1031 exchange properties. With a net lease property, the tenant takes care of the insurance, maintenance, taxes, and everything. So you can identify a property pretty much anywhere in the United States as long as it's a true triple net property. If you
So the economics, the whole model for them is shifting from a large front end space with convenience foods and convenience product to mostly small drive-through pharmacy concept. And so you'll see that roll out in their new locations.
Will they owner occupy those and then do a sale leasebacks, or are
they
those?
don't know. They're using developers primarily. They're still leasing them. but it's very challenging on the developer side because the rents are much lower because there's you're talking about 80% of the square footage going away. So
Yeah.
the rents are a lot lower. It's harder for them to get the development community as excited to do those deals, especially because they're just the land cost can absorb a lot of the makes the rents on a per square foot basis blow up if you're doing it a store that small. You're seeing them come off corner, which they never used to do. You're seeing them again making a completely different real estate model, albeit on a very small piece of their platform because they're doing so few deals.
I think the disruption, right? We talked to Carly Iacono over at Marcus now. She's with CBRE, and Jesse Lyman, Marcus Amilichap, who else? A lot of different agents that have been on Net Lease TV.
Yeah.
And in the last year, they were saying that the disruption from Amazon got a little bit negated because of coronavirus, that people wanted to physically have access to pharmaceutical goods. They didn't want to wait. There was a big, supply constraint in March and April of 2020 because of coronavirus, and people couldn't get pharmaceutical goods. And then people really started to go back to the pharmacies. They liked the fact that they could go to their local pharmacy. And I think the pharmacy sales really went up because of that. It's almost like, the housing prices here in California have gone ballistic. Nobody wants to live in the city anymore. So everybody's fleeing the cities and they're coming to, rural areas where they can have more land because they know their lifestyle is changing because of coronavirus. So coronavirus kind of actually helped, I think, the pharmacies to become in vogue again because the sales were kind of amazing in 2020. They were just flying off the shelves.
All of that is true. I think also customers were utilizing the COVID testing and now the COVID vaccine product that the drugstore space was offering. And that brought a lot of people physically into locations that obviously an internet platform wouldn't be able to service. So that drove just getting people into the stores, and then you were seeing ancillary sales from people physically being there starting to go up as well. I think it was a combination of that, and like you said, just people wanting to touch and feel where their drugs were coming from. But and the stock prices of both Walgreens and CVS were up from the bottom as much as 40-ish% off their lows, in large part because of the excitement created by COVID testing, COVID vaccines, and getting people into the location.
That's what Walgreens provides. That's what we do, and that's what Marabella Finance does. Marabella Finance.
And then both teams have also put heavy resources into these minute clinics, the actual nurse practitioner or doctor facilities in their spaces. So they were really trying to see themselves as a health center and use COVID to juice up that transition, where you're going not just to buy a gallon of milk and some Fritos and pick up a couple prescriptions, but really utilizing these nurse practitioners and for minor health issues, and using it as a local health center. I think that's how they see themselves growing. I don't know if that's a good or bad business strategy, but certainly Wall Street thought that the COVID pandemic accelerated adoption of that.
And we've been at the pharmacy much more. So I got to say, just for my own life, I've been spending a lot more time at the pharmacy this year. It takes 7 seasons for this thing to go away. If you look at the Great Plague, it took, I think my wife told me at the very beginning, centuries or something, she read the Great Plague. So let's hope, but we have modern medicine. And that's where I think the pharmacies are definitely going to benefit from this Corona thing for a long time. And I don't know if the Amazons of the world are going to be able to disrupt, brick retail. What I didn't like when the pandemic hit is we couldn't get masks. What if there was ever a real crisis here in the United States and all the internet went down? You want to be able to go to a physical place near where you live to get your pharmaceutical goods. But so now transitioning on, so your main focus in legal is sales and finance transactions? You've done a lot of net lease.
Well, I would frame it slightly differently. We work with a combination of clients and client needs within a very narrow space. That narrow space is real estate. We focus almost exclusively on real estate. We either help developers, primarily developing retail-oriented or out-parcel-oriented facilities, as well as some gas station development, but basically out-parcel development, which then involves both the financing piece, some entitlements and leasing. And we do that, we help strategize with the clients, from pre-acquisition all the way through to their monetizing event, typically, the exit sale later. But we also represent high net worth families who have no capacity and no interest in development, who are just interested in somebody with a lot of seasoned experience in reviewing net leases to ensure their cash flow is properly protected within the documents, both in the lease and the title work and otherwise. As you have probably experienced underwriting, a lot of brokers peddle leases out there as being triple net that, you get into and have holes in there and may not be as protected as others in terms of landlord responsibilities. And really, I think there's no such thing as a true triple net. There's always some risks involved to an owner of real estate. I think the industry oversimplifies that, and especially when you're dealing with non-real estate professionals in these high net worth spaces, they really value that expertise. And so we're that partner, that handholder to sort of explain how to transition into the space. There are a lot of families, for example, who may have sold from multifamily and are now at a point where they don't want all the responsibility every time a toilet leaks or a roof or whatever, and they want the simplicity of ownership that Net Lease provides, but they still need to be educated on what those responsibilities are and make sure the risk profile matches up. So we try to be more of an honest broker between the real estate brokers who are trying to peddle these as pure coupon clippers, and for the most part they probably are, but to get people set up right on the front end, knowing what they're supposed to do and when, who's paying the real estate bills, do I pay it and then send it to the tenant, is it going? I mean, there are still some purely mechanical issues as well as some risk issues that every owner needs to be aware of, and then complement that with their financing decisions and what their risks are, either during the loan or being able to refi out of whatever they're financing into, becomes other issues that we dive into with lesser seasoned clients. So we work with both very sophisticated real estate professionals in the space And we also work with very unseasoned people who need somebody to translate this world to them in practical, realistic terms that allow them to feel comfortable taking it on.
What I see, Michael, is a lot of the family offices, 1031 buyers, they really don't know how to manage their risk. And Steve Wynn, there's a video clip of Steve Wynn on Net Lease TV, and he said, you know, he said the one thing I learned from Michael Milliken was you got to have reserves. He says Michael Milliken taught me that when you're developing, you got to be well capitalized, because when we started a project, it may be 3 years and we don't know when we get C of O how the economy is going to be. He said when he did the Encore, he started, and then I think when they were about done, it was 2009.
All right. Mike Milliken financed companies, from oil companies and cell telephone companies to gaming companies. Not one of them ever failed with a debt issue. Let's get that straight. In Drexel Burnham, not one ever failed. Mike's thesis about capitalization has turned out to be the backbone of all high-yield financing ever since. He's the most important figure since Bernard Baruch on Wall Street. I said capital structure was important at a time when companies lose a big 20% of their revenue or 25% of their revenue. If you don't anticipate a business downturn and have that built into your capital structure by having long maturities, by having isolated debt, non-recourse to the parent, by having low interest rate payments that you can pay even in bad times, and having cash reserves that allow you to ride out a bad time, then your capital structure will be inadequate and you can get into terrible trouble.
Yeah. And he said, but we managed our risk. We had everything kind of in place. We knew what we were going to run into. What I noticed with a lot of the 1031 clients, they're not real experienced. And if they had on the down leg no debt and they buy something all cash, let's say they go into a Walgreens deal or they assume a loan, sometimes they won't have proper legal counsel. Okay, and they'll
I you know, it's one of my greatest competitors in that space is people just electing not to have counsel. It's incredible to me. Now you're seeing people doing anywhere from 5 to upwards of 8 or 10 plus $1 million net lease deals, just winging it, you know. And
so let me tell you. So we were doing a Walgreens deal, same kind of scenario. This guy assumed a countrywide loan, older guy, and the loan was coming due. He didn't have Michael Levick to review the REA, the CAM agreement, the exhibits, and a lady tripped out on the sidewalk. Guess what? She sued for $1 million. He was supposed to have $1 million in liability on the REA on the sidewalk. When I read the REA, he said, "Oh, well, this is triple net. This is triple." I said, "Yeah, it's triple net, but you never read the exhibits." So he had to get a trip and fall attorney. He had to get an attorney to represent him with Walgreens to see. So it was a big mess because he didn't have proper counsel. I've had other people, we talked about environmental, you know, we run into that quite often. Just because it's maybe a new, you know, net lease deal doesn't mean there wasn't a gas station there 30 years ago and somebody closes all cash and they go to do a cash out or sell, and now the environmental pops up. They didn't have proper counsel saying, hey, let's review the environmental documents. So that's
or even ordering them sometimes.
Or even ordering them. And that's where the 1031 buyers, they can get themselves in trouble. They really need someone like you that can kind of second guess what's going to happen if they ever go get a loan, what the lender is going to look at and what are their risks. Because if there's a lender there kind of watching them, the lender's more sophisticated than they are in most cases. And they're going to catch a lot of these things.
That is true, and they will catch a certain percentage of them. But even so, what we're also seeing is a lot of people are just using the lender to replace the debt that they need to perfect the 1031. And so the leverage can be extremely low, and the lender doesn't care because they just figure they got so much equity that the borrower has that they're going to be protected, and they let a lot of things go sometimes in that situation. And then, you know, the borrower client is getting screwed because all of a sudden they're realizing that the lender didn't care because they can come after you. So,
Sure.
you know, there are environmental indemnities in almost every triple net financing package, and they just come saying, hey, you're going to take care of this. And maybe they're thinking they have non-recourse loan, and maybe they do, but at a certain point, you're going to walk away from a lot of equity potentially.
Yeah, you're going to lose everything you put in it. They may not come after you for the loss on the deficiency judgment, but you've lost all your equity. I don't know if people understand.
And you know, obviously not a happy result when you're paying really low cap rates in today's world. They're priced as if there's not a lot of risk, and
Right.
you need to make sure you're getting a product that has the same risk profile as the cap rate you're paying. And that whole piece, I think, has been greatly undervalued by a lot of buyers. The smart buyers, I think, understand that and you know, appreciate the vetting process that needs to occur as you get into lower and lower and lower cap rates. And we've been out there telling our clients we do not, unlike a lot of people who were seeing and forecasting inflation and cap rates going up, we just are not seeing that. We don't think that's going to happen, and we quite frankly think it could be a bias to cap rates continuing to march lower here as the long bond rates start to come down again.
Yeah, look at the treasuries. It's amazing. Everybody, I know when we were doing deals together, because we've done some deals together, full disclosure, where you were representing the buyers on the legal, that specific client kept, you know, we just never knew what rates were going to do. And I think, you know, 10-year treasury was at like 3 to 5%. Now we're down, you know, we got sub 1. Who would have ever thought that, you know, and the 10-year has been marching down since 1980. I mean,
and you're still, down. I think it's still on the march down. I really think there's a lot of macro factors that are pressuring the 10-year as well as the longer duration bonds down. And the effect is people are going to be running for even lower cap rates. And the impact of that is you're really pricing these particular properties for perfection, because when you're only generating a 4 to 6% yield on your money for very long periods of time, you've got to make sure that isn't going to be gobbled up by a risk event that turns it to nothing.
Well, the other thing I tell my clients is maybe get rental increases, at least if there is some inflation. You know, the one thing that's different than the 80s is that today the economy is very global, right? The labor, and India is kind of having a tough time now with coronavirus, but India, China, Mexico, Latin America has really kept a lid on the multinational companies like Google, Facebook, these big country tech companies are really producing the billions in the United States, in trillions. Amazon. So that's kept a lid on costs. But internally, like fast food and that, I mean, you can only draw on people here to work as a chef in a McDonald's. And that's where they've really seen some of the price inflation in restaurants. In things that you really can't.
Well, and labor too.
But things that you can't remotely, you can't get a guy really in India working in a fast food place here. You can on computers. He can access your computer. Hold on.
They can design software, but they can't. They're not going to be flipping burgers for you and servicing customers face to face. And you're seeing that in the net lease space also, Chris, because you know this. It's a growing concentration of uses that demand a internet resistant or internet proof concept that is driving a lot of this. That's why you're seeing
It's a
fast
lot.
food, QSR, fast casual.
Right.
You're seeing dialysis become a whole space. Obviously, you're not going to do that over the internet. And doc in the box, urgent care, all these things are growing at rapid paces, and they're all share this internet either resistancy or internet proof concept. And owners of traditionally retail properties are hyper focused on that. So that trend is going to continue.
As a broker, a loan broker, a broker that does sales or represents buyers, you're looking at trends, right? You're looking at trends and trends that won't be disrupted. That's the same as the investors. At the end of the day, the net lease comes back to the store sales, because that's what's going to derive the rent, right? That's how the tenant's going to say, based on these store sales that we project, this is the rent we're willing to pay. And if you have a hot location where the store sales are going to go up, where there's some kind of story, a college is going to come in, a hospital, then the store sales will go up. And when your lease comes due, you're going to have more leverage for them to stay. And if they take off, maybe you can re-tenant it. So I tell people that you really, even though you're kind of locked in on a lease, you got to look at the story of the real estate. You want a secondary thing there that at the end of your primary lease term, where are store sales going to be for your specific location? And is there some generators that are going to increase those store sales? One thing that's really interesting that they came to me with a service, and this is for existing landlords where you have a lease coming due, and I don't know if you've seen this, but now what they can do, it's really amazing. They can see how the store is doing with cell phone usage.
Yes. Yeah, a lot of developers are utilizing that information in terms of site selection. I mean,
now I'm a landlord, right? And my lease is coming due. I can look at the cell phone usage, see where my customers went before they came to my location. If I have a Jack in the Box, okay, they went to the Walmart, then they came to my Jack in the Box. And so normally, the tenants are going to hire a leasing guy to call you and say, well, your location, we don't know if we can renew. And if you lower the rent, we'll renew right now. But with this, you have more of an idea of how your specific location is doing. It's that kind of technology. Today, the real estate is really all about information. Information can make you a ton of money, and it can put you in a better negotiation point with your lessee, with your clients. It's all about information, and
well, and the other thing that you probably have seen, I know we see it, is these less sophisticated owners of net lease properties don't have a strategy for what happens at the end of the lease or the end of their loan, and they just get annihilated, because that's also part, or should be part, of the acquisition and financing purpose. What happens when this thing matures? What happens when this lease expires? And knowing your leverage point in terms of evaluating the risk of renewal or not is, and the re-tenanting risk is very absent with a lot of these buyers. And again, the more seasoned your team is around you, these questions get raised, these discussions are had, and I think the client has at least a better idea going into it as to whether their rents are competitive with other places in the area, or was this just somebody buying up rent that can never be replaced, and now you're going to be in trouble at the end of the lease. All those things, I think, you
got to analyze, right? That's managing the risk.
And they help give people a comfort level going into these investments. And as you know from financing them, as the cap rates have gone down, the actual dollars invested in these smaller properties has really risen dramatically in the last 10 or 15 years. And so people who have been in the space are sitting on enormous 1031 gains, and people who are getting into the space are redeploying, maybe from equities, maybe from other sources, but they're deploying large sums of money. You know
what I tell people, if you were a client of mine, when do you want your cake? Now or later?
Yeah.
Now,
Yeah.
if they say now, hey, are you willing to accept the risk of a balloon maybe down the line?
Yeah.
Are you willing? Are you thinking of maybe selling this property? We'll do a friendly or no prepay.
Right.
You know, and if they say,
yeah, you and I have been involved in transactions together with clients who didn't want the long-term rate lock and wanted push that rate down because their whole strategy was limited to just a few years. And I know you were able to provide that. That's not common in the 1031 financing space, but there, especially as these rates have remained steadily going down, there are people out there who are utilizing that type of financing with no prepayments. As you know, typically these credit tenant financings have lots of prepayments for early payoffs, and so to have a wide variety of product as a lender is also sort of part of that discussion too, right? Because then they're saving a fortune on these loans if they don't intend on holding all the way through to have a product that avoids all those prepayments.
So we just did these two 7-Elevens, 14 million.
Yeah.
And I met that client. You know, normally what we see, Michael, is we're kind of doing more of a big picture relationship with these 1031 buyers, because they call me and they have a specific property, but they really don't know the learning curve. So I kind of tell them, hey, I know, you know, you want this property. 9 times out of 10, the people that come to us don't end up doing the properties that they first show us.
Yeah.
Okay, because they become more educated. So this specific buyer was going to buy some daycare in Nevada, and we had a lender, you know, lined up on the deal. But then, you know, we talked to them about, you got to look at the credit quality of the tenant and the guarantor. Well, they looked at that and it wasn't real strong. So then they shifted to 7-Elevens where you had AA- rated credit. And I asked them, hey, when do you want your cake, now or later? They said later. We're okay to do a 30-30, 30-30 fixed for 20 on a small loan of $4 million. And I asked them, look, if we do this kind of loan, the prepay is going to be cumbersome because we're going to lock you for 20 years.
Yeah.
You know, and so take that into consideration. And they were going to make 30 or 40,000 a month and have a smaller loan balance in the 20th year. So they said, we can live off that. That's no problem. 20 or 30,000 a month's a lot of money, and it's conservative. And we did the loan on 2 brand new 7-Elevens with gas. One in Texas. They like Texas and Florida because of the, you know, the states are very progressive with the taxes and all that. And we did the deal. But that was a circumstance where they wanted a little bit more conservative loan structure. So, you know, if they didn't want something where their loan was due 5, 7, or 10, and they to risk the chance if rates are a little bit higher, they were locked in for 20 years. But you know, that's the kind of things we discuss. And there's kind of a learning curve. I don't know if you found that. At first, they'll bring me something, and then all of a sudden they'll transition. You know, a light bulb goes off in their head. Oh, I get it now. I understand. You know, if I go with this bad credit, they may go BK. If I go with this, you know, the possibility of default on the rent payment with a AA- tenant is much less.
Right.
So hey, we're running short on time here. I wanted to give you an opportunity to let our audience at Net Lease TV know how they can reach you. What's the best way? Do you do like a free consultation to take on their specific transaction? How do you normally do it?
I mean, we meet with, I'd say the term meet loosely because it's usually a phone call or a Zoom call, but to just evaluate what they want us to do, whether they have a specific transaction in mind or whether they're entering the net lease space. It's something that we do very regularly. You're not, paying for lawyers to be trained in this space. All of our team is pretty well seasoned in this. We do enough volume that we know a lot about what these leases should look like, and have experience with most of the major national chains that are in the space in terms of their leases and the ancillary documents that come with those properties. We also are seeing, people repurchasing these things before they're even built. And so we're also really helping clients figure out ways to protect themselves from construction risks and other things that they're being asked to take in this net lease space that they never used to in order to get access to some of the better products. So we help try to identify where they are, how they're trying to acquire things. If they have a mortgage team like your company provides to basically sync up and be a quarterback for them, as you know, and I think that role is very helpful, takes a lot of anxiety out of the process for these types of clients. And we have, I'm based in our Chicago office. We have another office in Atlanta. We do this type of practice nationally, so we're able to, we're comfortable working with assets of this type all over the country with clients based from, New York to California and everywhere in between. So this is.
How can somebody call you, Michael? Do you guys have a website, and what is your email?
Right. I mean, our website is levickroth.com. And again, I'm Michael Levick. I'm the managing partner.
Spell that out real clear.
I'll spell it for you in a minute. I'm Michael Levick, and I'm the managing partner in the Chicago office. So you can reach me at mlevick, that's M as in Mary, L as in Larry, E as in Edward, V as in Victor, ICK, at Levick Roth, that's Levick, ROTH.com. There's a bio there if you want to learn more about me or about the firm. But again, we focus pretty narrowly in the net lease space and in this retail real estate space. So we do have a depth of experience. A lot of even larger firms, even more expensive firms, may not even be able to offer. So check us out at levickroth.com, or you can reach me by email. That's I check it seemingly every minute of the day. So feel free to try me there.
Michael, are you going to be at ICSC in December in Vegas if it happens? December 20th.
We typically go, as you know, do go to the national convention in Vegas. This year, okay. We're not sure yet if we're going to go in December, but we certainly will be there in May if that does occur, as it typically does, third week of May. We've yet to decide if we're going to be in
Let's
Vegas.
Hope it happens. Let's hope
Corona goes away.
Hey, Michael, power to you. Thank you for being on Net Lease TV. Awesome interview.
Well, thanks, Chris, for the opportunity to be here, be with you and your audience.
I want to do some deals together. I think we've known each other for a long time. I trust you. You know what you're doing. You've done a great job on all the other transactions where we worked with you. I've heard great things through some of our mutual clients. What a great job that you and your team do. And thank you again for being on Net Lease TV. And look forward to seeing you in person. Hopefully we can meet up at ICSC.
Yeah. Definitely, Chris. Again, thanks for your time, and thank you for having me on Net Lease TV.
Thank you, Michael. Bye-bye.
Be well. Bye now.